Good evening, everyone. I hope you're all having a wonderful day. Back at it again, looking at the E-mini futures contracts. We'll be breaking down the monthly, the weekly, down into the daily, getting into the nitty gritty of what occurred today, as it was a wacky Wednesday after the Fed minutes came out. A lot of choppiness and kind of what we were expecting for the most part. As per usual, we play games prior to the Fed minutes, and then volatility kicks up once it's released as the algorithms and short term traders get absolutely demolished. And we try to capture what we can on the day. Ended up pretty decent on the day, not too bad. Not massive day P&L wise, but overall a good day. You make $500 a day, that's pretty good money. So that's what we shoot for. That's what we like. Consistent small gains, those add up versus getting involved when you shouldn't and getting absolutely smoked, like I'm sure a lot of traders did. I'm sure at some point in time, 2 years ago, I may have been one of those traders getting absolutely smoked. Instead, today, I was patient and got in when I could. Um, only took 4 trades on the day and did well. You don't have to take a lot of trades on the day, especially when you're trading the mini contracts, to have a really good day. Just pick and choose where you please, take the money where it's at, especially on the days like today where you don't get much trend. The day was pretty much chop rotational, an extent to an extension in the lower distribution from the previous day. I'll go over that here in just a second. But for now, let's look at a monthly chart. Our monthly looking pretty ugly right here, right? Pretty ugly candle on our monthly for February. We were looking for acceptance above that 41.41 level, which was December's high, right? We were looking to get above that. We have not found much acceptance above. It was an inside month up. So far, it has failed. We've been looking for that acceptance over 41.41 for quite some time. Didn't get it. Uh, Monthly balance for me though, 43.2750. Balance low, 35.02. Uh, could you say the monthly's up? Yes, but for me, I need the monthly to get above 43.2750 before I start saying that the monthly is up. So for now, I am still in a large balance. You could say it's one time framing up. There's nothing wrong with that. But for me, 41.41 was a massive level, and I did not see what I wanted to over that. So monthly, still in a balance for me. Some people still say it's one time framing up. That's okay. The market's subjective. It's an art, not a science. You choose what you want. But for me, I'd be like playing the edges on a rotational day. This is just the edge. This would be near the extremes of that uh, range, right? So for me, balance. Just chopping and consolidating. That's all it means. Weekly. Weekly is now firmly down. We're now firmly one time framing down for the week. Show you the balance here that we had. That outside week down was that 41.41 level. We attempted to find acceptance above it 3 weeks in a row. Did not. I'm gonna go ahead and get rid of that label. But here's our balance. How did we determine that balance? Well, we were one time framing up, right? 1, 2, 3, 4, 5 weeks in a row. We had an inside week, had another inside week here on this candle, and then we took out the previous week's low. So we stopped one time framing up. All one time framing up means is we're taking out previous weekly highs, right? So each of these weekly candles, we're taking out a previous weekly high, and then we stopped that by taking out a previous weekly low. So we put the market into a balance or area of consolidation. And this week we've taken out that area of consolidation, the 40.2950 low from that massive weekly range, right? So now that we've taken that out, we start to get a little extension from it. We're one time framing down because now we've not only taken out one weekly low, we've taken out two weekly lows, so we are one time framing down. Your next target for a weekly standpoint is this weekly low of 39.6325, and that is below our 50-day moving average. However, not to ignore. As you can see, the market has been setting higher highs, right, and higher lows on the short term. Higher high, right? Are we just setting in potentially another higher low and a back test of this downward trend that we broke out of, that we had from all of last year? That's potential, right? That is, excuse me, very good potential. That's what is occurring. We're currently on the daily chart. We are back testing the 50-day moving average, right? We are one time framing down though. Keep that in mind. So the market can continue to liquidate even further. Only thing you don't want to do and you don't want to see as a buyer that accumulated a position in this range here is you don't want to see us on the weekly and the daily come back into that range, because at that point, once you get back into this original cost basis here that I just highlighted, then you might have some long-term players start to panic in the sense of getting out of their trade that they had on originally. Um, so that's all it was a cost basis here. It got rotated up. They began to take their profits. Supply increased, and we began to liquidate. Let's look at our daily. Daily, same thing, same balance, right? For me, my balance area was the exact same as our weekly balance because I wanted to see uh, some some good extension and good confirmation before I said the weekly was down or the daily was down. Could you have said that the balance was at that 69 level here, and then now we've been one time framing down 4 days in a row? Yes, you can. But for me, my balance low just got broken at 40.29, same as our weekly balance low, and we've been one time framing down 2 days in a row now. So all that means is the same thing, right? We're taking out previous daily time frames lows. So we took it out here on this day. We took it out here on this day. Trend day down. Took it out here today. Didn't get much of a trend day down, but we attempted and played in the lower end of the range from yesterday. We back tested the 50-day moving average and held it decently. Closed just above it as we closed at 39.9925, and the 50-day moving average was at 98.55. All right, excuse me, 98, yeah, 98.55. So closing above the 50, but we're below the 20-day moving average now 4 days in a row. We're looking to find acceptance below the 20. And then the next destination is obviously, as a seller, you want to see us get below the 50. Back test the 200-day moving average, which is currently down here at 39.47. So if we get below the 50, that would be the next destination as far as the daily moving average goes. So one time framing down 2 days in a row now. Could you say 4? Yes. Either way, the market's been selling off. Are we getting a little stretched here? Potentially. But right now, the market is comfortable being short. Sellers are comfortable in the market right now as we have not stopped one time framing down on the daily. Now let's get into our 30-minute time frame. And go over what happened today. All right, so as you can see, today was a massive chop fest for the most part. If I bring up just our balance area from yesterday, you can see yesterday when we broke that balance area, we trended down all day long. And then today we played in the lower end of yesterday's range, right? Uh, I said in yesterday's video, it was a double distribution day. Let me show you what that looks like with all the destinations pulled up. I said yesterday was a double distribution. You would use where the single prints start here in E period at 40.25.25 as our as a high of day. So you would treat these as two separate days, right? So E to K's low is 1 day essentially. So you got up today to E's high, couldn't take it out, and then rotate it over. That's all that happened in J period. Um, or excuse me, happened early on in A, and then we took out the day's low, but didn't get much extension. It could not go trend. We attempted to go trend in B period, We had a decent set of single prints. C took out B's low. We tested the 50-day moving average. That's that pink line that you see down here. Tested the 50-day moving average. Didn't get much extension below B's low. And then rotated up to fill the single set of single prints that we had there. And then began to chop for a little bit in D and in E period. F period grinded up. G period got near the day's high, finally took it out a little bit. H period grinded up even higher, got near the afternoon rally high. And this is all before the Fed minutes were released in J period. So obviously, the market was short down here. Covering came into the market, so the market was being bought up, and we grinded up higher into that number. H and I period, uh, where people began to get out of their long positions, and shorts began to get out of their or began to quit covering. So bids were becoming less available. And then in J period, whenever the market opened up for the Fed minutes, we just chopped back and forth between this massive range. We got the afternoon rally high, almost got into our set of single prints up here, but you can see we got near the high of day, or E's high, excuse me, where the single prints start. Got near the upper end of the lower distribution, could not take it out, and we rotated over, and we resumed doing what we were doing on early on in A, B, and C periods, which was go down. So after J period, massive volatility and chop, and bodies were left all over the place. K period came in, and we set a new low day in K, set a new low of day in L period, and then set a new low of day in M period. We probed, but we closed back in on the inside. So today we only go out with today's high, today and today's low. No afternoon pullback low, no afternoon rally high, no wide point of control. We only ended up 8 wide here at A's low. So not significant, but will not be ignored if we come into that area tomorrow. 8 wide right here at 4,650. Like I said, won't be ignored, but not something I'm going to mark on the chart. I only took 4 trades today. Those trades being in G period and in I period, and then in J period, I got involved. So in G period, I was taking shorts against the high of day and the overnight high. So the high of day, the previous at the time, bring out my cross here. So the high day at the time was at 40.1850, and that's exactly where I was getting into a position. I was at around 40.16 and 40.17 and 40.18 is where I was selling the market. So I was shorting there against the overnight high, against today's high. Overnight high was at 40.21, so I was comfortable with adding up to that point, and then I had my stop just above that. So as G period pulled up, we got to 1925, couldn't get the overnight high, and we came in just enough for me to get out of the trade for a nice profit. I exited the trade at 40.13 on the pullback in H period, actually. So I held until H, and then I got out of the trade. I let H do its thing. I got involved in I period against H's high. I got short 21 against H's high and against the afternoon rally high. So had we gotten above the afternoon rally high, I would have gotten out. So I was risking 3 points to the upside because afternoon rally high was at 24. I was shorting at 21, so risking 3 points. And then we came in pretty good, and I took that off for a nice trade. Then I got involved in J period twice on longs. Once on after we kind of settled down a little bit, and I'd seen that we had pulled back, gotten down to VWAP, and we were holding just above VWAP at the time. VWAP at the time was right around the 4006 level, 4007 level. Seeing that we were holding that level, and I also had a Bookmap pulled up. And for those of you that don't know what Bookmap is, you can get that. Oh, that's not what you want. You can get that on TD Ameritrade, and it's a crazy looking chart, kind of like this, where you can see orders in the market. So I had that pulled up, and it seemed at the time that there were some buyers stepping up into the market. Oh, sorry about that. Seeing that there were some buyers in the market, and then I got involved in along. It popped up really good for me, and I got out of the trade. And then in J period, near the low here, 4,000, I got involved. I was looking for us to rotate back up because we were holding the 4,000 level pretty good. I was long 4,001. It popped up to 4,004. I got out of the trade. Just quick scalps, not staying married to any of these trades because of the context of the day. We were rotational, we were choppy, didn't know exactly which way the market wanted to go, was just trading the reactionary moves. So, with that being said, key takeaways from today is we got our afternoon rally high, but could not get into the single prints. That's not something to ignore. So there was sellers are comfortable, right? We never got out of the lower distribution. E's high to K's low. Essentially, the only time we did was when we took out the low of day down here at 4,002, and we got below it. We closed below the 4,000 level today. Something not to ignore. We tested the 50-day moving average, not something to ignore. All right. Sellers are in control still. Sellers are comfortable. However, we did not go trend. Tomorrow, let's see how we digest. If we do not open up with a gap tomorrow, then you'll look to chop inside of today's range and the potentially inside the range. Basically, excuse me, I know I'm saying range a lot. But look to chop inside of today's range, essentially. If we cannot gap lower and trend down even lower to this 39.6325 area. If we can't do that, then look to chop around. If we can't take out the high day and get into the single print and to the upper distribution from the trend day yesterday, then look for chop tomorrow, which means I will be looking to scalp the extremes and not doing much. Um, I've had a good week so far. It's a short week, but out of the 2 days so far, it's been a good week. Cannot complain. All right, so let's mark our destinations and get you guys out of here. 40.25 is the high. 40.25 is our high day. And then we have today's low day. High day. Today's low. And then we have the 8 wide point of control. I'm not going to mark it on my chart, but it's not something to ignore tomorrow. So that's all we go out with. If tomorrow we open up inside today's range, expect choppiness until we either take out the low of day and go trend to the downside, or we take out the high of day, fail the set of single prints, and grind up into the previous balance low and then into the upper distribution. So if you were to take today's range and highlight it, it can go one of two ways. We either open up, I hate when it does this. You either open up and stay exactly inside, chop around, or you open up above the 8 wide point of control and you grind up higher to around 40.50, or you open up and you grind lower near the set of single prints in the low of day down here at 39.6325. If that does not happen, you can expect maybe something like a half range day where we just chop inside, have unchanged value, and just chop around. That's a possibility. These are things you want to prepare yourselves for. Make sure if whenever we are trading tomorrow, if it's a rotational day, trade the extremes and the edges. Don't stay married to the trade. Take your profits and get out. Other than that, ladies and gentlemen, thanks for watching. If you don't mind, leave a like If you are new, subscribe. We'll catch you guys in the next one. See ya.